But let's head in the other direction. Let's talk about leaving France, unfortunately. But the French exit tax, is there such a thing? If so, how does it work?
The purpose of this tax is to allow the French tax authorities to know that you have left the country, first, and second, to tax any capital gain which could arise if you sell the shares in the company you own once you have left France. The exit tax, you have to declare the value of your investment in France at the time of your departure. If you go to a country within the European community, it's very simple. You just declare the value, and that's it. You have nothing to pay, and that's okay. If you go outside of the EU, you have the same process, but you have to provide a guarantee for the payment of any tax which will be due if you sold your investment when you have left France. That's the purpose of the tax. You don't have to pay for anything upfront, but you have to provide some type of guarantee, which would be a bank guarantee, which can be you give your shares, your non-dismount shares to the tax authorities in order to cover any potential tax liability.
I understand. So it's more of a guarantee. And this is of French situs assets only, French shares. So if I have shares in Microsoft, it doesn't consider.
No, it doesn't work unless the tax authority gives the right to France to tax the sale of these shares. It depends where you are.
No, all right. So just to be clear, you're a French tax resident, you decide to leave and you decide to go outside of the EU. So an exit tax is due. So like a deemed liquidation of the shares you hold anywhere in the world.
Yes. It's
I see. Worldwide.
Because otherwise you would have been taxed in France.
Right. That could be pretty onerous, especially if you got in early with a company and now it's gone very high.
Well, your portfolio must exceed 800,000 euros, so it's not so high.
And there's no arrangement that can minimize that.
No, but you don't pay anything.
Until there's a liquidity event.
And after 2 years or 5 years, depending on the value of the asset, it's finished. Exit tax is not applicable anymore.
So you just need to hold on to it for either 2 or 5 years afterwards.
It's something which is manageable.
Right, that just don't sell.
Yeah, exactly.